Welcome to the Deep Dive. Today, we're plunging into a story that really sent some shockwaves through the crypto world.
Yeah, it's a pretty wild one. A single trade, just eye-popping numbers. It kind of redefines things in decentralized finance, maybe.
Or at least pushes the boundaries of what seems, well, sane. So we're digging into this based mostly on a news article that laid out the details.
That's the one. It gives us a pretty good picture of this massive bet.
Right. And our mission here isn't just to, gawk at the headline number. We want to unpack it.
Like who is behind it? What platform allowed this?
Exactly. And maybe most importantly, what does a trade like this scale, this structure, tell you about high-stakes trading now in the decentralized world? It's about the dynamics, the sheer nerve involved.
Absolutely. It's a fascinating case study. Leverage, volatility, it's all there.
Okay, so let's get into it. The article talks about this trader, a whale, right? A big player.
Yeah. Seems so. And they didn't just open a Bitcoin position. They apparently expanded an existing one to, well, a staggering size, $1.1 billion.
$1.1 billion. Let's just let that sink in for a moment.
Right.
On a decentralized exchange. And the leverage, you mentioned leverage, 40x.
40 times leverage, yes. Which, maybe we should quickly explain that.
Yeah, good idea. So 40x leverage means for every dollar of their own capital they put up?
Their margin.
Right, their margin.
Yeah.
They were controlling the $40 worth of Bitcoin value. So it massively ramps up the potential profit.
But also the potential loss. Dramatically.
Hugely. So this platform, Hyperliquid, you said?
Hyperliquid, yes. And the source points out this is believed to be the very first position ever to actually cross the $1 billion mark on that specific platform.
So Hyperliquid can handle that kind of scale? That's impressive for a DX.
It really pushed the boundaries.
Okay, so who is this trader? The one with presumably nerves of absolute steel.
Well, the article points pretty strongly to an account on X, James Wynn. This person apparently claimed the position.
Claimed it?
What?
Publicly.
Seems so. And there's data from like a block explorer called Hyperscan that appears to back this up. It shows the position linked to this trader's activity.
And what's the outcome? Did they make money?
Oh, yeah. The data now shows a gain of around $36 million on this trade.
36 million profit on one trade. That's just, wow.
Astounding, isn't it?
How does someone even build a position that big on a DEX? What are the mechanics?
So the article explains they built it up using a pretty substantial margin. Their own capital at risk was $28.4 million.
Okay, $28.4 million. That's still a huge amount of skin in the game.
Definitely. And that margin across several trades, apparently, is what allowed them to control the $1.13 billion Bitcoin long position, using that 40x leverage we talked about.
Right. The 40x on the $28.4 million gets you to the $1.1 billion figure.
Exactly. And they locked in an average entry price for this whole thing at $108,065 per Bitcoin.
Okay, so $28.4 million margin, 40x leverage, controlling $1.1 billion of Bitcoin, entered at $108,065. But you mentioned volatility. It wasn't just straight up from there, was it?
Oh, not at all. This is where the nerves of steel part really comes in. At one point, Bitcoin's price dipped, and the position was actually showing a loss of about $16.3 million.
$16 million in the red.
Before the market turned back in their favor. Yeah.
That's the kind of moment where most people would just crumble, surely, especially with that leverage.
Absolutely terrifying.
Yeah.
A relatively small price move against you with 40x leverage can just, poof, wipe out your entire margin.
So liquidation must have been close.
Well, the article highlights the critical level. The liquidation price was set at $103,790. If Bitcoin dropped below that, Hyperliquid system would automatically close the position.
And they'd lose the whole $28.4 million margin.
The whole lot. Gone.
Wow.
Yeah.
So even when they were down $16 million, the price was still hovering above that liquidation point. That really puts the risk into perspective.
It does. And it seems they weren't just sitting passively either. The article mentions data showing the trader started taking some profit or maybe reducing risk a bit earlier.
But really?
When Bitcoin was trading around $106,000, this was back on May 20th, just before the price really took off upwards.
Okay, so some active management there. Smart.
Yeah. Data from another source, Hyperdash, seems to confirm some strategic closing of parts of the position as the rally started, not just holding on for dear life.
Makes sense. So a trade this huge, this dramatic, the crypto community must have been buzzing, right?
Oh, absolutely. The reaction was pretty much what you'd expect, just sheer astonishment.
Disbelief.
Disbelief, yeah, maybe a bit of fearful respect. The article quotes some analysts and influencers. Someone called Sigma2 noted it was the first position on Hyperliquid to exceed $1. Simple fact, but underlines the scale.
Right.
And others, like crypto influencer Follis, specifically mentioned the nerves of steel needed. Lots of people online just calling the trader an absolute madman.
Absolute madman. Yeah, that feels kind of appropriate for betting $1.1 billion at 40x and staring down a $16 million loss.
Questioning the sanity, basically, of taking such a huge risk.
So who is this James Wynn, then? Beyond this one, admittedly epic trade. Does the source tell us more?
A little bit. It says Wynn describes himself as, and this is a quote, a high-risk leverage trader and a memecoin maxi.
A memecoin maxi. So someone really into those highly speculative joke coins.
Apparently so. He's known for making some pretty bold calls in that space, too. Claimed to have identified PEPE, the frog coin, as a buy when its market cap was tiny, like $600,000 tiny.
Huh. So you've got someone playing in the meme coin casino, but also making billion-dollar Bitcoin bets. That's quite a range.
It suggests a comfort level with, let's say, extreme volatility and speculation across very different types of crypto assets.
No kidding. How long has this trader actually been using Hyperliquid? Was this their first big play there?
According to the source, Wynn only started using Hyperliquid about 2 months before this massive trade happened, relatively new to the platform.
2 months, and they're already doing billion-dollar trades.
Well, they didn't start that small.
Mm-hmm.
The data shows they initially deposited a pretty significant chunk, $4.65 million worth of USDC, the stablecoin.
Okay, so $4.65 million initial deposit, then scaling up to that $28.4 million margin for this trade. Makes more sense.
Right. Built up to it.
And was this Bitcoin trade the only thing they did? Or were there others?
No, the article indicates they've actually completed 32 trades since joining the platform.
32 trades in 2 months. Active trader, then.
Seems like it. And not just Bitcoin. Their positions included leveraged longs on XRP.
Okay, a major altcoin.
The official Trump token. Trump
Nice.
FARTCOIN.
FARTCOIN. Really?
Yes, FARTCOIN.
Yeah.
And TONGCOIN. So yeah, that FARTCOIN mention definitely reinforces the memecoin maxi label.
Okay, then. FARTCOIN. It's certainly a diverse portfolio. High risk seems like an understatement.
You could say that. A very interesting mix described in the source.
Let's talk about Hyperliquid again for a second. What kind of platform is this that can handle something like this? $1 billion. 40x leverage.
Well, the article describes its main product as a decentralized exchange, a DX. So it operates without that central intermediary, like a traditional bank or broker.
Peer-to-peer trading, basically.
Essentially, yeah. And this exchange runs on its own dedicated blockchain, a layer 1. It's not just built on top of Ethereum or something else.
Ah, okay. Its own L1. And does it only do these kinds of leverage trades, these perpetual futures?
No, the platform apparently offers other DeFi stuff too, like spot trading, just buying and selling coins directly, and borrowing and lending services as well.
So it's trying to be a more complete, decentralized finance ecosystem.
Looks that way. Built on its own chain, capable of handling trades that, frankly, would be huge even on a centralized exchange, let alone being one of the biggest ever seen on a DXX.
Yeah, it really is a statement about where DX technology is now.
Precisely. This trade is kind of a powerful demonstration of what these decentralized platforms can do now, handling serious liquidity, high leverage, massive positions.
But it also highlights the risks, right? The unique risks in DeFi.
Absolutely. You've got smart contract risk, the speed and sort of finality of automated liquidations if things go wrong. It's a different environment.
It really shows how far DeFi has come, enabling these kinds of, well, high-stakes maneuvers that just look very different from traditional finance.
You take the inherent volatility of crypto,
which is already high.
Right, already high, and then you amplify it like crazy with that kind of leverage.
It's almost like theatrical,
Yeah.
a demonstration of huge potential gains.
But also that knife edge risk.
Yeah.
Especially high leverage on a DX, where the safety nets, the mechanics are just different from TradFi.
Definitely different. Okay, so let's try and wrap this up. What are the key takeaways from this deep dive?
Well, I mean, the sheer scale, obviously. A $1.1 billion Bitcoin bet. The frankly staggering 40x leverage.
On a decentralized platform, Hyperliquid.
Right. And the trader, this James Wynn, who apparently wrote out a terrifying $16 million paper loss.
Before ending up with a $36 million profit. Incredible story arc.
It really is.
And this whole thing, like the source material shows, it just perfectly captures the extremes of DeFi, doesn't it?
Totally. Extreme volatility, massive potential upside, but also that just eye-watering risk.
Yeah.
especially with leverage involved at that scale. It's a whole different ballgame.
Yeah, a world away from your typical stock trade.
Which brings us to maybe a final thought for you, the listener, to mull over based on everything we've discussed from the source.
Okay.
You have this one trader navigating this huge loss to a massive gain, all on a platform designed for peer-to-peer trading outside the old financial rails. So what is the simple fact that DXs exist and can handle trades like this size, this leverage, this risk? What does that actually mean for the future?
For the future of financial markets, and maybe even for how individuals think about taking risks in this digital age.
Exactly. What does it all mean? Something to chew on.